welcome to VSA 5-Minute Morning Miner, and it's Tuesday, the 2nd of September, and I'm back from my big trip around Mexico, where obviously I visited, just in case you'd forgotten how anybody could fit, I don't know, but I'm just going to remind you, Avino, Gold and Silver, Sierra Madre, Luca Mining, and last but certainly not least, Guanajuato Silver. It was a very informative trip, Paul. I was underground at all four. I was around the plants and processing plants for all four. All four very different, all four with different opportunities. But I think the whole sort of Mexican mining scene is just so interesting. Now, we have written the trip up. Dispatches Part 1 went out last week. Dispatches Part 2 will probably go out today because I was writing it up over the weekend. And so if you want to read about it, that's where to read about it. And we'll also, of course, be doing video blogs on all four companies to give more detail on what I saw. But it was fascinating. Anyway, Paul, you got any thoughts about my trip?
Well, I just wish I was with you in order to have taken it in, that's all.
Well, I did plan it at the start of the year. And I think the key to it all was at the start of the year, the silver price, I think, was still below about $30. It's now above $40, just as we've been predicting. And as we say in the dispatches, we think actually the next couple of years, silver will go to $70. And if that is right, then the share price performance of these four stocks, which I accept have already been exceptionally good this year because they're stocks we've been recommending. No, they've been good because they're good companies and the silver price is going up, not because we've been recommending them. But, we've got Avino up 383% year to date, Luca up 190%, Sierra Madre up 85%, and Guanajuato Silver up 67%. But there is still plenty more upside in all of them if we are right and the silver price goes to $70. Paul, I'm sure you'll get yourself a trip soon. And I do need a little bit of a break after all of that, but I'm always up to visit a mine. I think it's fascinating. Anyway, let's turn to today because that's what this podcast is all about. And just a quick one, Premier African Minerals, because it's a corporate client of ours, just to point out today they've announced that Canmax has converted its interest payments into equity. So they are keeping their equity in the company. There's still obviously a lot going on there in terms of getting the lithium plant up and running successfully. And of course, it's a new month, it's September, which means George Roach, who obviously was the founder of the company, will be stepping back anytime soon. In fact, I think technically it has maybe not been announced. Anyway, bit of a lot of change at Prem. Right, Paul, let's go on to what we news today. I'll tell you, why don't you start on one? Not old Emma Priestley, that sounds terribly. Young Emma Priestley. She's still bashing away at Goldstone, isn't she?
Yes, she is. We had an update on the production statement for the Homasi mine for the there in Ghana, and they are making some progress here at this point at Goldstone. 11 kilos of gold doré were poured in the week commencing 18th of August. That's 355 ounces of gold. And they still have the plans to extend the heap leach even further here with the geomembrane and geotextiles ordered and paid for, with the delivery by the end of September. So expanding the pad means they can put more more ore on the pad for leaching. And they did say they're moving back to pit 1, where the average ore grade is about 1 gram gold per ton. Just to keep investors in mind here, this is a small-scale heap leach operation, and I do think that they do need, even at these high gold prices, need to get this consistently producing at least 250 ounces a week of gold doré in order to be a profitable commercial operation. So that consistency is what is the important thing.
Actually, one of the things that intrigued me about when I was going around Mexico, Paul, and maybe you want to make a quick comment on this, because I think it's an interesting point. All four mines that I visited were simply producing a concentrate. Luca obviously is more zinc, but the gold and silver mines were just creating a concentrate rather than actually pouring gold or silver. And yet they were getting a very good price on it. The payables on it was not that harsh. And of course, it makes it a better security situation because people can't come and risk it. Why just quickly, Paul, it's a 5-minute morning mile, I know, but why don't more just make a concentrate?
Well, concentrate requires a much more expensive production facility in order to produce that concentrate. So the capex involved is greater than, for instance, for heap leach operations. That's probably, or one of the really consistent reasons why the heap leaching made such a material change to the average gold grade of a deposit that could still make money, being pushed way down. And that was developed in the 1980s.
Okay, well, that's a short answer. I think there's quite a lot of debate I could have on that because the plants I saw were not exactly expensive operations. They were actually very, very simple. I mean, it was basically just crushing and floating. But it's an interesting debate for another time, I think. And you and I maybe will have a chat about it. And maybe when we talk about Mexican mining, we'll talk more about it. Anyway, okay, so that was that. What else do you want to talk about today, Paul?
Well, we also had Ecora Resources announce that's the critical minerals royalty company that's listed here in London. They announced that they are selling their Dugbe gold royalty that they got back in 2012 from the Elemental Altus back at that particular time on the books at just under $6 million that's been carried through this time. And they will be selling it for $20 million here with the $16.5 million upfront payment. So good return, you'd have to say, over 13 years here.
Very good. All right. Anything else you want to talk about?
Just to remind investors that the World Nuclear Symposium, the annual event in London, is underway today, and they must be pretty bullish on the uranium market, I would say.
Yeah, you're absolutely right, and there's quite a few of uranium companies in London today. Two of ours, Myriad Uranium and F3, are in town. If anybody wants to see them, then do shout. The uranium price, actually, of course, is still stuck at $70. Has been there for quite a long while, hasn't it?
Yes, that's right. But the forward outlook, as far as energy demand is concerned, particularly for the AI data centers, forward outlook 3% annualized globally for the next 20 years on energy demand. And the only way to feed these AI centers with enough power at an affordable price on a global basis is to push nuclear for sure.
There'll always be uranium bulls. We'll see. I'm sort of neutral, I think, at the moment. I am thinking about turning bullish just because we're in a commodities bull market. Talking a commodities bull market, I'll just wrap it up very quickly. Of course, it's the tungsten price. I don't know if you were talking about it last week, but it really is getting stronger and stronger. It's sort of gone through $500 now. At these sort of prices, tungsten mines should be making a fortune so long as they're in production. So we've obviously got a trading halt out there on EQ Resources. I think we need that trading halt to finish. It's obviously because they're doing a capital raise. I suspect that this will be a good capital raise by EQ, and it'll be probably what I describe as one that then clears the capital raising capability. Well, not capability, but the capital raising requirement. And that could send the stock price to actually move significantly further forward because it's always been held back slightly that people are worried there's another one coming. I think investors are now starting to wake up to the fact that tungsten price has gone so high. And actually now the way to get your tungsten, or to raise money for tungsten companies, they've all been looking for strategics. Every single tungsten company in the world, we've obviously been doing a lot of work for them as well in that respect, has been looking for a strategic shareholder. Strategic shareholders are very difficult to get hold of. Actually, the market's open. You can go and raise money for a tungsten company out of institutions and retail today, and that you'll get it better, and the cost of capital will be lower. Anyway, we'll probably be talking about EQ again tomorrow because they haven't announced what they're doing yet. They've just simply said they've got to have a trading halt pending a capital raise. On that note, I've talked far too long. Sorry about that. Back tomorrow.
Back tomorrow.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.